Hello everyone, today I will introduce you to a secret that will take you to a new level in the field of trading and investing. I will do my best to show you the difference between the two ways of making money in financial markets, namely, between investing and trading. What is investing? Let's begin with investing. Investing is a long-term approach to the market, where investors carefully select assets and believe that their value will grow over time. This may involve buying shares in well-managed companies with solid foundations, investing in bonds from stable issuers, or acquiring real estate for long-term rental purposes. Investing is like building a solid foundation for your financial future, even though profits are not always immediate. Thanks to historically stable growth and dividends from some stocks, investors can achieve long-term financial success. What is trading? On the other hand, we have trading, which is a short-term and often active approach to the market. Traders seek to profit from price movements on short-term intervals. They can be day traders, who close their positions by the end of the trading day, or swing traders, who hold positions for several days or weeks. Trading requires intensive market monitoring, quick reactions, and the ability to manage risk. Traders often rely on technical analysis, monitoring price charts and indicators to determine the optimal time for buying and selling assets. Most traders invest in so-called CFD stocks. You will learn what these stocks entail and how they differ in the video directly addressing the topic of CFD stocks. You can find it either on my channel or in the near future, as I plan to release this video. So, don't forget to hit the subscribe button. The only thing you need to know about these stocks in this video is that they allow traders to bet on a declining market. This means that when the trader predicts that the prices of assets will fall in the near future, they bet on the decline. If the price of the asset does indeed fall, the trader makes a profit. It works the same way as buying stocks, except traders make a profit when the asset falls, and they incur a loss when the price of the asset rises. It's also important to mention that traders use leverage. This means that the trader is essentially investing, for example, 5 or 20 times the amount of money they actually invest in reality. This results in the trader making a profit of 5% or 20%, depending on the leverage used, if the price of the asset increases by 1%. On the other hand, if the price of the asset decreases by 1%, it means the trader incurs a loss of 5% or 20%. The advantage of trading is that traders have the opportunity to trade for a longer period. CFD stocks simply replicate the price of regular stocks, and as you surely know, the markets in America run for a total of 6.5 hours each day. So, investors can only invest during these 6.5 hours. Traders, on the other hand, can trade for around 16 hours on weekdays. Holding period. The key difference between investing and trading is the length of time assets are held. Investors can hold their assets for many years and believe in their long-term growth. This means they don't worry about short-term market fluctuations and often ignore daily turbulence in the market. On the other hand, traders are interested in short-term price movements and may hold assets for only a brief period before selling them, aiming to make a quick profit. However, short-term positions entail higher risk and the need to be constantly vigilant. It's also important to mention that at the end of each day, traders must pay for owning a particular stock overnight. This involves paying interest for indirectly borrowing money through leverage. Trade strategies and analysis. Investors often use fundamental analysis and invest based on fundamental factors such as earnings and the fundamental value of companies. They also conduct in-depth research and examine the health of the companies they invest in. Many of them seek long-term investment opportunities in growth companies. Traders, on the other hand, rely on technical analysis. They monitor price charts, patterns, and indicators to identify short-term trading signals. Traders are often flexible and can quickly respond to market changes. Emotions and psychology. Psychology plays an important role in both approaches. Investors must be patient and resilient towards short-term fluctuations. In order to avoid making impulsive decisions during market turbulence, they must keep a cool head and trust their investments. Traders, on the other hand, need to be quick and have control over their emotions to avoid succumbing to panic during rapid price changes. Discipline and planning are key to successful trading. Conclusion and choice. And that's a basic overview of the difference between investing and trading. When choosing between these two approaches, keep in mind your financial goals, risk tolerance, and investment horizon. Simply put, investing is much less risky than trading. However, when successful, trading can be much more profitable than investing. It's important to emphasize that trading is actually much more complex. You're predicting the markets for a short period ahead and using tools like resistance charts and other tricks. Making mistakes in this can happen very easily. If you don't do it correctly, every trade becomes speculation, and sooner or later, you'll start losing money very quickly. On the other hand, in investing, if you don't analyze the company, not much happens. Since the global economy has a long-term upward trend, you can rely on the fact that even if you buy stocks at the wrong time, you'll be in the positive in a few years. Even if you're not sure about the company and haven't analyzed it, it doesn't mean you'll lose money. In most cases, you won't. Sometimes you will, but in trading, it's the opposite. Even the biggest professionals lose money daily, but they're able to earn more than they lose. So, if you're really good at trading, you can become a millionaire in a relatively short time. This is highly unlikely to happen with investing. Also, don't forget that a combination of both approaches can also be a successful strategy. Thank you for watching this video. Both methods have their place in the market, and the choice depends on your preferences and goals. Remember that whether you decide to invest or trade, thorough education, planning, and always being prepared for the financial journey are essential. If you have any questions or experiences related to this topic, please share them in the comments. We wish you the best on your investment and trading journey, and we appreciate likes, subscriptions, and shares. We look forward to seeing you in the next video. Goodbye for now.